Why are our loans getting rejected even after submitting all necessary documents? Why, despite repeated efforts, you are unable to get loan approvals? The answer lies in your low credit score. It's something everyone should be cautious about. A small mistake can significantly damage your credit score, making it difficult to secure loans. So, you need to learn factors affecting your credit score, how your credit score impacts your loan eligibility, most importantly, how to improve your credit score. Learn all of this and much more with our credit score course.
Boss Wallah. Be the boss.
Welcome to Credit Score module. I'm sure you have learned about credit score in Financial Freedom course briefly, but then I've created this special course on credit score specifically because this plays a very important role in your life. Credit score, you may think it's just a 3-digit number. You just don't know the consequences of having bad credit score. Many people neglect it, that too when we have crises like the one we are going through now because of COVID-19. We kind of tend to ignore our credit history. We tend to ignore our, the repayments, and that in turn will create havoc in the later point of time. Hence, it is essential to maintain a very important and a very good credit score. So I'm going to talk to you about that in detail in this course, and I've divided this course into 4 modules. In the first module, I'm going to give you an introduction. I'm going to explain you a broader picture about credit score. And in the second module, I'm going to talk to you about the factors which affect your credit score, the factors which makes your credit score bad or good, right? And then in the third module, I'm going to talk to you about why it is important to have a good credit score, the benefits of having good credit score. I'm going to discuss in detail. And in the last module of this course, I'm going to help. I'm going to give you some tips which can help you improve your credit score. So let's start one by one very quickly. I'm going to give you a very practical explanation. You will get to see the things on my screen as well. So let's understand what is a credit score. This is same like any other score you get when you write an exam. So you write an exam and you get the score based on what you write in the exam. Similar way here you get your credit score based on your credit history, which means you have borrowed money either through credit card, personal loan, home loan, loan against property, education loan, business loan, whatever, all kinds of loans. And now, how is your repayment history? Have you paid them back in full on time? How is your repayment history? If that is good, your credit score goes up. And if you have not borrowed but you have given, you are the guarantor to someone's loan, that will also affect your loan. That will also affect your credit score. Hence, it is important to know detail about it. So, just to give you a quick background about the credit score, this was originated back in 1951 in the US. So in 1951, US created this centralized scoring. So I'll tell you what happens, right? So if I am a bank, okay, you are my customer. You have borrowed money from me in the past and you have not paid me back in full, or you have not paid me back in time. So now next time when you come back to me for loan, I know that you are not a trustworthy person. You don't stand by your words. You didn't pay me back in time in the last time, right? But then you have borrowed from another bank in the past and you have not paid them back. Now you come to me. How do I know you have borrowed from them in the past? How do I know that you didn't pay back? I don't know. I will not get to know. That's when this credit information companies comes into picture and your credit score comes into picture. It is basically a compilation of the data provided by all banks and financial institutions who gave you credit in the past. Using that, these credit information companies come up with a score which tells whether you are a trustworthy person, whether it is good to lend you money or not. So going forward, once your credit history is established, any new lending is always based on your credit history. Your eligibility, income documents, yes, very good, you have all that. But your credit history is bad, banks may not lend you. Hence, it is essential to maintain a very good credit score. And in India, credit score was introduced only in 2000. So in India, what used to happen, I have seen this happening in the past. People used to borrow from different banks. They never used to pay it back. They were mostly, kind of trying to cheat the banks. And see, how other bank will get to know? You tell me. It's going to be very challenging, difficult, right? That's why this plays a very important role. So in India, once they started, so how did they create it? So they kind of, decided not to have an external, a foreign credit information company operating here. That's why RBI initiated this discussion, and through IBA, Indian Banks Association, the banks came together and they decided to form a company with joint ownership of all the banks, and they called it a CIBIL. So then this CIBIL was later partly acquired by TransUnion, a foreign company, and then today it is mostly operated by TransUnion, very less of Indian administration there. But still, since RBI has made it mandatory to have all the data stored in India and other things, users' privacy and data is safe is what they say. So, but in India now it is not just one TransUnion CIBIL. You have 4 credit information companies. Apart from TransUnion CIBIL, you have Experian, you have Equifax, and you have CRIF Highmark. So these are the 4 different credit information companies available in India as of now. So now you may ask me, how does my credit score works? How is this being calculated? So let's say I as an individual, okay? Now I have used 3 credit cards from 3 different banks. I've taken one car loan from another bank. I've taken 2 personal loans from one bank here and one bank separately. Now I've taken a home loan. Now what happens? All these banks, NBFCs, from whom I have borrowed money, all of them report my credit history, my repayment history to one information company, or all the 4 credit information companies. Since we have 4, all 4 will get it, because they all are licensed by RBI. Hence they get the credit information of mine from all these banks and NBFCs. So now using that information, these guys will score me. Now, just because your information is same, you borrowed the same amount of money, everything is same, these credit information companies will not give you the same score across. The score from Experian may be different from the one given by CIBIL. The score from CIBIL may be different from CRIF. So all of them have their own scoring mechanism. They use that to score you. Hence, it is important to know why there is a difference, because when you check your credit score in different websites, it is different everywhere. It is not going to be same always, right? It is essential to have that clarity, right? Now, once you check your credit score, you will have 2 outcomes. Either you have a score or you just don't have a score. If you don't have a score means either it says it's not applicable or no history, which means your credit records doesn't exist, which means you have not availed any credit in the past. If you have not availed any credit, you have not taken home loan, you have not taken business loan, you have not taken credit card, you have not borrowed a penny from any financial institution or bank, which means banks have not reported your credit history to anyone, which means credit information companies have no clue about you. So now the question is, if you don't have any credit score, credit history, will you be able to avail loan in the future? Yes and no. Why yes? If your income documents are good, you have sufficient documents, you are a good, credible person in terms of, your social status, you work in a reputed company, you have Form 16 ID returns, all that, great, you will get. you are not working in a reputed company, but you're working in some small firm. Your income is not that great. In that case, if you don't have any credit history, you may not get it. You understand what I'm saying? You may not get it. Hence, it is important to have a credit history. So I'll give you some tips to have credit history. I'll give you later. So now, one is no score, other one there's a score. If there's no score, it says no history or not applicable. If there is a score, this score will have mostly 4 ranges. 1. So the credit score is always between 300 to 900. So 300 to 549 is considered to be the worst credit score, which means you will not get any loan from anyone. 550 to 649 is considered to be again bad, but there are chances that if you apply for a secured loan, some banks may give you. If you have a credit score between 650 to 749, unsecured loans very doubtful, but some banks may consider, but otherwise secured loans, yes, you can get it, right? In case of 750 to 900, it's a good score, excellent score, you will be able to access loans. So now, coming back to what is the difference between secured loan and unsecured loan, I want you to understand, when you mortgage something, hypothecate something, pledge something and avail loan on it. A gold loan is a pledged loan. You pledge your gold and take it. A home loan is a mortgage loan. You mortgage your home property papers and you take the loan. Hypothecation is like your car loan. You hypothecate. You hypothecate the ownership of your car to the bank and you take loan on that, right? That's how it works. So that's called secured loan. Unsecured loans like your unsecured business loans, unsecured personal loan, your credit card, all these are unsecured loan, which means you have not really given any property or any other asset as a collateral to avail this loan, which means tomorrow if you default, banks will have very less options to recover this money except the court route. Okay. So coming back. Now, the credit score between this 300 to 900, you have to understand why is it less? Is it, if it is between 300 to 549, why? If it is between 550 to 649, why? 650 to 750, why? Right? This you have to understand. So this, if you have to understand, you have to understand what are those factors which influence the score. So there are primarily five important aspects which banks consider, the credit information companies consider while giving you a score. Number one, your past performance, your past records, past repayment history, whether you availed the loan in the past and paid back in full. That's important, that they check. Number two, they check the credit mix and the duration. What I mean by credit mix and duration is basically, whether you have, availed only secured loans or unsecured loans. If you have availed only unsecured loans, which means your score may go down because, you have not taken any secured loan, which means you may not have any property. Credit information companies have their own understanding, analysis of this, right? So it's good to have a mix of secured plus unsecured loans. And then they'll also check your leverages, which means you have a credit card with 1 lakh rupee limit. Have you used entire 1 lakh rupee always, or is it that you have only used 30,000 out of it, 30% out of it? So when you use less, when you leverage less, which means you are a good guy. If you're using full, which means you may be in dire need of money, right? And then hard enquiries. So whenever you check your credit score, there are two kinds of checking. One is called hard enquiry, second one is soft enquiry. You check your credit score on your own, it's called soft enquiry. Banks, financial institutions check your credit score, that's called hard enquiry. So if a financial institution, bank is checking your credit score, which means you have applied for loan, which means you are in need of money, which means your credit score will go down, right? So in case you check your credit score on your own, which means you're very conscious, right? You want to see if you can improve your credit score and all that, which means there will not be any impact on credit score if you check your credit score on your own. And the last one is, in case if you have become a guarantor to someone and all, then what happens in case if they don't pay back the loan they have taken, then the credit score will go down. These are the five aspects. So with this, I'm trying to finish this introduction module, but I'm going to give you that in-depth explanation of the factors which affect your credit score in my next video, where I'm going to share with you about 7 factors which affect your credit score. So I'll be waiting for you in the next video. Please come fast. So as I shared with you in the last video, there are various factors which affect your credit score. It is not just something that you've not paid back your loan in full, your credit score goes down. There are various other factors as well. Many people say, hey, you know what, I borrowed money, I paid it back, but my credit score is still bad. What do I do? It is because the credit score is not generated or derived based on one information. There are 7 important factors which affect your credit score. So I'm going to explain you one by one why it happens. So I'm showing you everything on screen so you can make out. Number 1, your credit utilization ratio. What is credit utilization ratio? Which means you have borrowed money from the bank through your credit card, right? You use your credit card. Now your credit card has collectively, if you have 2-3 cards, all put together you have, let's say, 5 lakh rupee credit limit. Now if you have borrowed 5 lakh, you have consumed entire 5 lakh rupee, which means you have consumed 100% of the credit available to you, which means your credit utilization ratio is 100%, which means you are in bad need of money, which means you may not be financially healthy, and then your credit score goes down. So what is the right way, right credit utilization ratio? It should be 30% or under 30%, which means if you have a total available credit of 5 lakh, you should not have borrowed more than 1.5 lakh, which means through credit card. So that's very important. Credit utilization ratio should be always less. It should be 30%. Number 2, if you are making too many inquiries for loans, your credit score goes down. Many people have this habit of, they borrow money from one bank, or they apply for loan in one bank, and that bank rejects your application. You go and apply in 10 places. Or at a time, just to save time, let me apply in 10 places. Whoever gives me first, I'll take it. Now all these 10 guys will make a request to credit information companies, which means they consider that you are in need of money and the credit score goes down. So please avoid making such too many inquiries. It's good to make very few inquiries. Then repayment history, which plays a very important role. What is repayment history? Whether you have, repayment history has 3 components. You have taken money, you're not paid it back. You're not paid it back, at all. Second, you have delayed it. Third, you have settled it. So I'll explain you each one of this, right? So repayment history means, number 1, you have taken money, you're not paid back. There are so many people. They take the money and they don't even pay one installment. They just run away. They are willingly, it's willful defaulters. The RBI termed word is willful defaulters, right? So that's called willful defaulters. Number 2, you have taken money, you have paid money always, but then the EMI date is on 10th, you have paid on 15th. Always delayed. So which means you are in a financial crisis. Otherwise, why would you delay every time, right? So you are not paying on time. 3, you borrow 10 lakh. It has become 15 lakh with interest. You go to the bank and say, no, I have no money, I can't pay you back. Now somehow with the bank you strike a deal, you say that, okay, I'll pay you 10 lakh, your principal amount back. Bank will give you no objection certificate, but it doesn't mean that you are free from your debt. You still have to pay that 5 lakh rupee interest. That will be shown in your records. That means you have settled your account, which means you are still not debt free. right? So it's important that you don't settle. So your repayment history really plays a very important role. And the third one, so fourth one is credit mix. As I explained you in the last one, your total, I mean the total debt what you have should not be only unsecured. It should be a combination of secured and unsecured. That's when your credit score will go up. And then the fifth one is, if you're frequently asking your various credit card providers that please increase my credit limit, increase my credit limit. If you're making frequent requests, they go to bureau, credit information companies asking them to, asking them to share the credit report. So what happens then? That is also considered as a hard inquiry, and your credit score goes down. So please avoid doing it. And the sixth one is lack of credit history, which means you might have taken some bike loan 10 years back, 5 years back, but after that you've not borrowed anything, which means there's absolutely no record or very limited record to index or score your credit, right? Because to give you a credit score, I should have sufficient amount of data. When there is no credit history, I can't really give you a score. So it's important that you have availed a credit in the past. Many people, they ask me, sir, I don't have any credit score, what do we do? You take loans, as simple as that. You can take as simple, I mean, you're purchasing a mobile phone, take it on in EMI. You are purchasing a laptop, take it through EMIs. So that you can probably pay back through installments, and you will be able to see your credit history, credit score going up. And the seventh, which is a big challenge, in fact, as you see on the screen, the errors. There are many people, they have not really borrowed money, or they have borrowed and they're paying on time, but then there are wrong entries. So what kind of wrong entries? There are some loans which you never took but appearing in your credit report, or you have taken less amount but it shows more amount, or you have paid but it shows as you have not paid. So these kind of wrong entries, errors in the credit report also brings down your credit score. So you need to look into all these 7 things. But anyway, I'm going to discuss this in detail in the last module of this course, where I'm going to explain you how to improve your credit score. So what I'll do now that you have understood what are the factors which influence, which affect your credit score, in the next module of this course, I'm going to explain you the benefits of having good credit score. So I'll be waiting for you there. Please come fast. You may ask me how this credit score will help me. Is it really important? What kind of loans will be affected? Is it that, if I have a bad credit score, I will not get just unsecured loans, or both secured and unsecured loans? What impact we will have on secured loans if you have a bad credit score? I'm going to explain you this in detail. Let's look into it one by one. So if you have a bad credit score, what will happen on your secured, unsecured loans? So I have given you the definition of secured loans and unsecured loans, right, in the last video. Let's understand. If you have a secured loan, if you are applying for a secured loan, which means you're looking for a home loan or loan against property, car loan, something of that sort, and you have a bad credit score. Now in this case, you may not be able to negotiate with the bank. It may so happen that banks may charge you more. See, like in case of home loan, some banks for people who have credit score of upwards of 780, they offer you at 8.8%. Some banks, if you have a bad credit score, offer you interest rate up to 12-13% for home loan. Just imagine 8% and 12%. For a crore rupee loan, 8% is 8% and even 10%, let's say. 2 lakh rupee extra interest per year. Why do you want to pay? So I want to understand, when you take home loan or any other secured loan, if your credit score is bad, you will end up with paying higher interest. Second, you will lose that negotiation power, which means you will not be able to demand better terms, you will not be able to ask them to waive off these processing fees and other charges. That's about secured loans. In case of unsecured loans, score below 650, very rare, very difficult, I would say impossible to get unsecured loans. Score between 650 to 720, yes, there are possibilities, but again, they may charge you very high interest. 720 to 780, they will give you at good terms. 780 and above, they'll give you at very good terms. They will charge you less interest if your score is above 780, which means you're more trustworthy. So it's good to have a good credit report where you borrowed a lot of money, you paid it back on time, you're paid, your score, your report should talk in length, right? That's essential. That really plays a very important role. So now, considering that, I'm going to list out about 8 benefits of having good credit score. Number 1, it gives you at cheaper interest rate, right? So if you have high credit score, your interest rate will be less, as you see on the screen. Second, if you apply for a credit card, you get better benefits and rewards. People who have high credit score, they get more benefits in terms of better reward points or better welcome gift, things like, because see, everyone wants to catch that good customer here. Every bank wants to catch that good customer who has a good credit history and all that. And then avail pre-approved loans. There are a lot of pre-approved loans being given away by these banks. So they look at those customers who have high credit score. In fact, they run campaigns by partnering with credit information companies. And then the fourth benefit you get is a longer tenure. When you apply for a loan, let's say personal loan, if you have a bad credit score, they may say, hey, you know what, I'll give you 24-month tenure. But if you have a good credit score, they may give you 60 months tenure. So, or in case of home loan as well, right? Now, so if you have a good credit score, they will give you a longer tenure. And the fifth benefit you get is faster loan approval process, which means, see, this is a very simple psychological practice, right? Any banks will think this guy has a high credit score, means there's more competition to take him by the competition, right? The other competing banks might take this customer away from us. So let's process his loan faster. See, I apply for a loan. My credit score is very good. Now this bank will be in, will have that fear. If I delay the process, this guy might go to another lender. If, let's say, my credit score is bad, I apply here. They know, okay, if I go to other, banks, they will not consider my application. So this guy will not run away. Let's process the application later. So this is what happens. So it is important that you have a good credit score. And the sixth one, as I said in the past, negotiation power. You will have good negotiation power. When you have a good credit score, you can actually demand better terms in the loan. You can tell them, hey, you know what, I don't want this processing fee to be there. Or you can tell him, hey, you know what, I don't want this prepayment charges. Things like that you can always demand with the bank if you have a good credit score. And the seventh one is you get discount on processing fees, which means you have applied for a personal loan, your credit score is too good, they say 1% processing fee. Sometimes they waive it off. Sometimes they give you 50% discount. Same thing happens with your car loan, business loan, home loan also. If you have a good credit score, they waive off your processing fee. And the eighth benefit you get if you have a good credit score is, if you apply for a credit card, they give you higher credit limit. See, normally they won't take the risk of giving too much of extra credit limit to a person with low credit score. But person with a high credit score, they give a higher credit limit. These are the 8 benefits. So now that you have understood the basics of credit score, You have understood how, the factors which influence your credit score. You have understood the benefits of having a good credit score. I'm going to talk to you about few interesting tips, just about 8 tips, which will help you improve your credit score. I'm going to give you these tips in the next video. Please come there fast. I'll be waiting for you. So now we have come to the last video, last module of this course, and this is very important. Everyone wants to improve their credit score, and improving credit score is not a rocket science. It's very simple. I'm going to give you very simple tips which are practical and can help you improve your credit score. The number one tip I want to tell you is please don't pay any money to anyone. The bigger mistake we make is just because my credit score is bad, we end up with paying someone. See, there are many people who run a mafia by doing this. They call you and say, sir, your credit score is bad. I'll help you improve it to pay me 20,000 rupees. You pay me 5,000. You pay me 10,000. Don't pay them a penny. Even if your credit score is bad, please understand no one can change your credit score. Many people, they even pay bribe to that loan DSA saying, that guy will tell you, sir, your credit score is bad. I'll have to give some bribe to this manager. I'll get you loan. Please pay me. Please understand, banks have a very strong processes in place. They can't give you loan just because someone is being bribed. No. Please don't give them a penny of bribe. I don't want you to spend money on these unwanted things. That's going to create a havoc. Please don't do it. And the next thing I want to tell you is, the second tip I want to tell you, credit mix. It is good to have a good amount of secured and unsecured loans. In case if you always had unsecured loans, there are two possibilities. You don't have any property to take secured loans. You can probably go for a car loan. You can probably go for a house loan, a home loan. It's good to have some secured loans. That will also lift your credit score. The third, please pay back your dues on time. Many people have this, what do you call? I mean, it's like the mindset, not to pay in full or not to pay on time. It is very important that you pay back your loans on time. If you don't do it, it's going to create a problem. Make it a point that you pay it back on time in full. See, I'll tell you why it happens, right? So when you don't pay it back on time, one, you're going to lose money because you'll have extra interest, late payment charges and all that. Second, you lose your credit score. And by losing your credit score, you will also lose the prospect of availing fresh loan in the future because other banks will not trust you. Please pay it back on time. And the fourth one, at least once in a 3 months, please check your credit score, credit report, and see if there are any errors. That's also important. And the fifth one, avoid multiple loan inquiries at a time. Please don't apply for too many loans at a time. Many people have this habit, but that's a disaster. That's going to put your credit score down. Please don't do it. And the sixth one, you should reduce your credit utilization ratio, because in case if you have a credit card and you're currently using 100% of the available limit every month, which means you will be at risk. It is good to reduce the ratio. Probably if you can use 30%, 40% maximum would be great. So it's better to reduce it. In case if you can't reduce, the seventh tip here is increase your credit limit. You have a card with 1 lakh rupee and you're using 1 lakh every month, increase it to 2 lakh so that you will be able to see your credit utilization ratio going down. That's very important. And the eighth benefit is, please don't settle your dues. Many people have this habit of, they borrow money, they can't pay it back in full, the accumulated interest has gone up, and just because you want to come out of the situation, you want to get rid of these agents who are chasing you for collection, because of that you settle it. Once you settle it, you will not be able to, make up the damage later, because that will be shown in your credit report for a long time. Please don't settle. As much as possible, try and pay it back on time, and pay it back in full. And in worst case scenarios, much can't be done, but if you settle it, you will not get unsecured loans in the future. So it's important that you pay it back in full. So these are the simple 8 tips. If you follow it, your credit score will improve. Nothing much to do. And as I said in the beginning, there is nothing called rocket science to improve your credit score. And I just want you to follow the basics and take care of this basic hygiene. Your credit score will improve. If anyone says, there's a rocket science behind it, you pay us money, we will do it, that's a scam, that's a fraud, that's cheating. Please don't fall prey to it. So I think with this, we are done with credit score course. I would love to share more wisdom with you. I would love to share more knowledge with you. I want you to be wise and rich. So I'll be there with another course. So let's continue our journey to become rich. Let's continue our financial freedom journey. Thank you.